I want you to address the obvious. This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy.
The arguments are it improves liquidity, that it takes what would be a small trade and aggregates it and allows it to get a better execution quality. The reason to run a pilot is to make sure that those claims are all actually valid.
Some brokers will say that these payments allow them to charge zero commissions. But there's no such thing as a free lunch.
From a young age, we are instructed to pursue education, attend university, and secure a well-paying job throughout our working lives. It is expected that we set aside additional funds from our salaries and invest them wisely. This could involve investing in stocks, Roth IRAs, mutual funds, bonds, or real estate. Many older individuals consistently advocate for the working class to save diligently and invest wisely, aiming to achieve early retirement and ensure a comfortable lifestyle with sufficient financial resources from the early stages of our lives. We are ingrained with the notion that education is essential, followed by a university degree, leading to a career that promises a substantial income along this journey. We are taught the importance of saving and investing. It becomes a mantra echoed by older generations, urging the working class to allocate a portion of their earnings toward long-term financial growth. Investing in stocks and cryptocurrencies has become increasingly popular thanks to their low entry barriers and the potential for long-term growth. Many individuals are drawn to these investment options because they allow for starting with small amounts of money, sometimes as low as $1. This accessibility enables beginners to dip their toes into the investment world and potentially see their money grow over time, essentially accumulating what feels like free money as the years pass among the plethora of investment platforms available. Robinhood stands out as a top choice for beginners. The platform's user-friendly interface and streamlined account setup process make it an attractive option. Robinhood presents investment information in a visually clear and concise manner, making it easier for beginners to comprehend and navigate real-time stock quotes, customizable watch lists, and interactive charts. Keep users informed about their investments. The platform also offers educational resources and informative articles to help beginners build their knowledge and confidence in investing, in addition to its user-friendly nature. Robinhood simplifies the account setup process. Users can quickly create an account, link their bank information, and start investing within a short span of time. The platform's fractional investing feature allows users to buy fractional shares of stocks and exchange-traded funds, ETFs with smaller amounts of money, making it easier to diversify their portfolios even with limited funds. Robinhood was co-founded in 2013 by Vladimir Tenev and Baiju Bhatt, driven by their mission to democratize finance and increase accessibility to investing for the general public. Vladimir Tenev assumed the role of CEO, while Baiju served as the co-CEO until November 2020. The two founders first crossed paths during their studies at Stanford University, where they both pursued degrees in mathematics and later earned master's degrees in computer science. Prior to Robinhood, they collaborated on a venture called Kronos Research, specializing in developing high-frequency trading systems for financial institutions. Their experiences and observations within the financial industry sparked a realization that traditional investment opportunities were not readily available to everyone. They identified a need for a platform that would eliminate barriers to entry and provide commission-free trading, particularly targeting a younger demographic and those previously excluded from such opportunities. This vision led to the creation of Robinhood, which quickly gained popularity and disrupted the brokerage industry with its innovative commission-free trading model since its inception. Robinhood has attracted significant attention and user growth, transforming the way individuals approach investing. While there have been changes in leadership over time, with Baiju stepping down as co-CEO in November 2020, the platform continues to thrive under the guidance of Vladimir Robinhood's mission to make finance more accessible. And empower individuals to take control of their investments has resonated with millions of users. Contributing to its prominent position within the financial technology sector, Robinhood, the popular online brokerage platform, found itself embroiled in a significant controversy during the GameStop and meme stock frenzy in early 2021. The controversy erupted when Robinhood decided to impose temporary restrictions on trading certain highly volatile stocks, including GameStop or GME and AMC Entertainment.
In the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them. And they could also trade in the thousands of other securities on our platform. So it was a difficult decision, and that's what we had to do as part of normal operations. This
led to widespread public outcry and a perception that Robinhood was prioritizing the interests of Wall Street over the interests of its own user base. The restrictions placed on trading by Robinhood prompted accusations of market manipulation. Critics argued that by limiting retail investors' ability to buy shares, Robinhood artificially suppressed the stock prices of companies like GameStop and AMC, benefiting institutional investors and potentially violating the principles of a fair and open market. The controversy sparked a wave of public distrust and skepticism towards Robinhood's practices and its commitment to serving the interests of individual investors as the controversy unfolded. Robinhood's actions drew the attention of lawmakers and regulatory bodies. Congressional hearings were held to investigate the events, with lawmakers questioning the company's decision-making process and potential conflicts of interest. Regulatory agencies, such as the Securities and Exchange Commission, SEC, and the Financial Industry Regulatory Authority, FINRA, launched investigations into Robinhood's operations, focusing on issues like market manipulation, customer protection, and compliance with regulatory obligations. The controversy surrounding Robinhood highlighted broader issues within the financial industry, such as the power dynamics between individual investors and institutional players, the role of social media, platforms in influencing stock market trends, and the need for transparent and fair market practices. It ignited debates around market regulation, the responsibilities of brokerage platforms, and the need for greater transparency and investor protection measures. In response to the controversy, Robinhood made several notable changes. The company revised its communication practices and increased transparency regarding its decision-making process. Robinhood also made efforts to improve its risk management systems and provide educational resources to help users make informed investment decisions. Additionally, the platform faced numerous class action lawsuits from users who alleged that the trading restrictions resulted in financial losses. The events surrounding the Robinhood controversy served as a catalyst for broader discussions and regulatory reforms within the financial industry. It underscored the need for clear guidelines and safeguards to protect individual investors, ensure fair market practices, and maintain the integrity of the financial system. The controversy also highlighted the importance of investor education and awareness to navigate the complexities of the investment landscape effectively. As the dust settled, the Robinhood controversy left a lasting impact on the financial industry, prompting regulators to scrutinize the operations of online brokerage platforms and consider potential reforms. The event served as a reminder of the challenges and responsibilities associated with providing accessible investment opportunities to retail investors while maintaining market